Welcome everyone, and then we should be live on Facebook in just a moment.
I'll bring up Facebook for answering questions.
Yeah, so people can hear us right now.
Cool. We're going live just a few minutes early and making sure this is working and bringing up stuff. We're going to be doing a live interview with, what do you want? You're an accountant, tax professional. What's the appropriate term there, Chris?
Sure. Yeah.
Yeah, sure. All of the above.
Yeah, that works. I'll be tax.
Perfect. So we're going to be doing an interview. A lot of you have accounting questions from time to time, and the generic response we give is the same one when people ask about Mac versus PC or favorite sports teams. We just kind of say consult a professional. We just deflect. So we've invited a professional here to help answer these questions, and we're excited. So bear with us just a minute. We're going to bring everything up, make sure it's working, and we'll be jumping in. So we've got a couple questions teed up for our tax professional friends, and we'll be asking those. And then if you guys have questions as well, feel free to drop those in on the Facebook group here, or on Perfect Live, or on YouTube, and we'll try and answer as many as we can. I'll pull up YouTube as well.
Yeah,
and,
you'll want to stay till the very end, because I think Chris is going to reveal a strategy to pay $0 in taxes, right?
Yeah, guaranteed. Guaranteed.
All right, stay till the very end. You can't hear it.
Can I spoil that one right now? Easy to pay $0 in taxes. Just make $0.
Yeah, don't make any money.
Yeah, that's what they taught us in college. It's not great for paying bills, but it's great if you want to minimize taxes.
Yeah.
All right, we've got that up as well.
16 people right now on
Pecan
YouTube.
Street Cookie Company says, howdy, y'all. Is it pecan or pecan? We could probably have a half-hour discussion on that.
It's gotta be pecan. And we're good on Facebook too, right?
Yep, everything's up. You guys comment if you're watching. Let us know where you're from. What's up? We got about 20 of you on YouTube right now, 10 on Facebook. Drop us a line, say where you're watching us from, say which job you're avoiding right now, because I know lots of you are at work. And yeah, we're glad you're here, and drop us some questions. She says pecan, so we'll go with that.
Pecan.
Great. Got somebody from Washington, Ohio. I would say OH, but I'm a Michigan State fan, so we won't get into that. All right, it is 1 o'clock. We're going to jump right in. This is going to be a very fast-paced interview. Guys, say hello to Chris. Chris, you want to wave, smile, talk?
How are you guys?
Wonderful. I think it'll switch back and forth.
It'll switch. This is just delayed here, but it'll swap.
On whoever's talking.
Yeah.
Awesome. So, Chris, where are you talking to us from today?
So I'm out in Maryland. The firm is in Annapolis. I grew up in Colorado. We moved out here a few years ago. So got family all over the country, but we're out east.
Perfect. So you're one of the few people moving away from Colorado as opposed to moving to Colorado.
Yeah, I was turning into California. So
absolutely, it is. It's California of the mountain region. So Chris,
Yep.
If you guys, will introduce him real quickly. He is, I think he's both of our accountants, both Matthew and myself. So he's been my accountant now for about 2 years. And again, we were kind of talking in the prelude here. A lot of the times on the Facebook groups, we get questions related to taxes, or when do I have to file, or how do I manage cost of goods, or anything there. And we typically just punt. We say, hey, talk to a tax professional. I don't want to get in trouble for giving wrong advice. There's a lot of different interpretations out there. Sales tax was a fun one. We could talk about that a little bit as well. But Chris has been that resource for us. You guys know me, the importance of tracking your numbers, knowing your numbers, being able to make good decisions. And a part of that is, one, making sure your bookkeeping is in order. But then there's a lot of things that come into place, just making sure your business is in order. We could share some fun stories about the IRS showing up at our front door, trying to get us to pay some outdated payroll taxes. So that was cool. Having an accountant, I'm pretty good with numbers. I'm not great when it comes to deadlines, as Chris can attest to. But even though I could do my own taxes, I don't. And this is an area, a good lawyer and a good accountant will actually save you money, not cost you money, because they will protect you. They'll help you make some moves that you didn't know were possible. Again, if anything happens, I'd rather spend my time building software and flipping books than dealing with bookkeeping, accounting, taxes, etc. So having somebody good in your ballpark, your neck of the woods, wheelhouse on your team, whatever analogy you want to use is great. So we're going to jump right in. Chris as well, if you guys have come to the Turn the Page events, we've done a number of those. Chris has been sponsoring the last couple of those. So a big thank you to you, Chris, for helping us out with that. That kind of helps us put those events on. We don't make any money doing those, and the money you pay, as well as the money that Bill from Sell Back Your Book has paid, have really helped us do those events and foster connection all around the country. So big thank you for that. And we'll kind of jump in here. I've got a couple questions. And again, we're going to go for about an hour. We need to respect this time. If you're watching this interview later, we are early December. It's like December, what, 11 today? 10?
Yep, December 11th today. December
11th. And of course, as a tax professional, this is Chris's busy season, trying to wrap up all the year-end things. And your season really carries through really till April, and then late filings as well. So we appreciate you stepping in, giving us an hour of your time, because I know there's probably a lot of other things that you could be doing right now. So again, if you guys have questions, drop those on Facebook, drop those on YouTube. Looks like we're getting a lot of engagement on YouTube. And so we'll jump in there, and let's talk just a couple questions in general. So Chris, you're not only our accountant, you're working with a number of Amazon sellers as well. You're trying to kind of branch out into that space in your accounting business. What are some of the things, just at a high level, that you're seeing that that people should be doing, or maybe mistakes they're making early on? Let's start there, and then we'll kind of jump into a couple granular questions that I prepared as well.
Sure. So early on, I think the most important things are to make sure that you have an EIN established, right? So take the time and actually set up the LLC. That's important. It's not really significant. It's not going to play a huge role in your business, probably in the first year, maybe the first 2 years. But at some point in your business development and your growth, you're going to reach that tipping point. And trying to change entity mid-stride, especially with Amazon and the way it has a tendency to freeze accounts when things change, avoiding an EIN change, avoiding a bank account change, all of those things are a lot easier when you start out with the right entity from the beginning. That's one. We're encountering that with a couple of clients now, kind of the mid-year shift from sole proprietor to an LLC. It's not the end of the world. It's really not. But ultimately, it does introduce a level of complexity and a hurdle that can be avoided if you're starting out today.
Yeah. So the other thing. Go ahead. I was gonna say, bottom line there, if you're going to treat this like a business, treat it like a business from the very beginning. I know California is fairly expensive to set up an LLC. So if somebody's just brand new to this, Chris, would you recommend they still jump in and create the LLC, even if they're just like testing the waters to see if it's feasible?
No, I think if you're experimenting with whether or not this is feasible, take your time and figure out if this is going to be a business or a hobby. If you're at that point where it's, made a couple of $1,000s and this actually, let's see if it can take off running. At that point, spend a couple $100, convert to the LLC, turn it into a business, treat it like a business, and you'll reap the rewards of that later on.
When someone's trying to set up an LLC, is there any harm in them trying to do it themselves, or do they need to hire someone like you to be able to set it up the proper way from the beginning? Are there any ways you can screw that up?
LLCs as a whole are actually, they're pretty simple. And most Secretary of State websites will actually walk you through that process. LLCs are a state-specific entity, and so really all you have to do is follow those instructions, walk it through. I'm happy to help with that, but by no means am I required. You set it up usually in the state that you're operating and living in, and then from there go to the IRS website and get an EIN. Those two things, the LLC, articles of organization, and the EIN, are the only things that you need to then go to the bank and open up a business bank account. Now you're cooking with gas, and now you're ready to move forward and treat this like the business that we discussed.
Perfect. So step one, treat it like a business. If you're going to jump in, get the LLC. I know here in Colorado, it's $50. Once you have that, the EIN is free. There's a lot of free business bank accounts. Shameless plug, I use Azlo, AZLO. It's a spinoff of BBVA Compass. And it's probably the first bank account really, but business bank account that looks like it's built for online. Like it's actually,
It's amazing.
it's a good piece of software. It's free. It's free checking. You can move money around. You can pay people. There's no weird fees or like anything else. It's just straightforward, great banking. I don't make any money. Maybe they should sponsor me, but don't make any money for saying that. It's a great bank. So if you guys are looking for a good business bank, it's online only. There are no branches. You can remote deposit checks. It's a little harder if you deal with a lot of cash. So maybe not the best opportunity for everybody, but that's a great business bank if you guys are looking for recommendations there. All right, so step one, treat it like a business. You had something else you were going to, Chris. What's
the next step after the LLC was opening up a truly separate business account. And that's really, really, really important. There's a lot of combining personal expenses and personal income with business expense and business income early on. Some of that can't be avoided, right? As you're starting out and you're still in kind of hobby mode, that's going to happen. But again, as soon as you reach that tipping point, you're like, all right, this is a business, or maybe this is a business I'm interested in pursuing. Pull the business income and expenses out of your personal bank account. Set something else up separately so that you can track the ins and outs accordingly. You'll save yourself a fortune in time and effort, and that's what allows you to save money in taxes. Is tracking those expenses along the way.
Well, and just so even if someone, let's say they're not sure if it's going to be a hobby or a business, so they don't want to go through the LLC efforts, should they at least get a separate, even if it's a personal bank account, just something separate so everything is walled off?
Yes, absolutely. So it doesn't need to be the officially titled business account. If it's just a checking account that mentally you have allocated as a business checking account, perfect. Really, from an accounting and tax standpoint, completely irrelevant. Just don't go get personal gas and go to Chick-fil-A for lunch using that card. If you're going out and you're buying inventory, or you're going out and you're buying supplies, that's the card that you use. Just don't mix personal and business expenses. Again, be the purist kind of mentally with that approach to separating accounting.
Yeah, it's something I do. And I'm not as good as this. I don't have my wallet on me, but I've got separate. In my wallet, I've got 3 credit cards or debit cards or whatever you believe in. But I've got my personal, I've got a Scout IQ one, and I've got an everything else. And so those 3, I keep them very separate. If we're doing a client meeting with Scout IQ pays for it. If it's personal, I don't touch the business credit cards and try and keep it simple. What if you mess up? What if you go let's say you go buy gas and you pull the wrong credit card and you put it on your business expense and it should have been personal? What's the best way to handle that, just briefly?
Yeah, so that happens. It happens all the time, right? I have 2 bright red Wells Fargo cards. I grab the wrong one sometimes. And so if and when that happens and you have a bookkeeper, shoot them an email or just let them know, and we can, on the back end, pull that transaction out. If it happens and you don't have a bookkeeper, let's say you've got just an Excel spreadsheet and that's what you're using, just make a note and pull that expense out from your totaled up and deductible expenses for that month. Just make a note, call it a personal expense, and that's the end of it. It's not the end of the world when this happens.
Perfect. Would you recommend reimbursing from personal? Let's say gas is $25 and you paid it out of business on accident. Would you recommend making a transfer of $25 from personal back to the business just to cover it?
Yeah, you can, absolutely. So if you've got the cash flow to do that, fantastic. Pay yourself the money, transfer it back, and that way the in and the out zero out really, and you've completely washed that expense. There are instances in everybody's business, and we see it all the time, where you don't have the cash flow to do that, and it's actually a conscious or strategic decision. Hey, I'm going and I have to eat, so hey, the business is buying groceries this week. That's fine, right? If you don't have the money to transfer it back in, at least make a note, and at the end of the month or the end of the year, we capture it that way, and that way we're not deducting something we're not supposed to deduct, and it's categorized as personal money, even if you don't make that transfer.
Perfect. Those are great. So treat your business like a business. Keep your finances walled off, completely separate if at all possible. It's going to make things very simple. All right, let's jump into sorry, I was watching a delayed feed. It looked like your mouth was moving, but it wasn't. So trying to deal with a couple different computers going on here. Let's talk about inventory businesses, because at the end of the day, if you're flipping items on eBay, Amazon, Poshmark, you name it, Facebook Marketplace, it doesn't really matter. We're all inventory businesses. We all buy items or get them for free and we sell them, right? So let's talk through a little bit of cost of goods. That's a term you guys see thrown out there quite a bit. You'll see the acronym COGS, or cost of goods sold. And let's talk through a little bit just from the accounting standpoint. What does that mean? So if, like I used to think, and again, I studied accounting in college, this was before college, but I used to think, hey, if I'm having a great year, let's say I made 50 grand, 100 grand, whatever the number is, and I don't want to pay a lot of tax on that at the end of the year. Let's say I didn't plan ahead and prepay and I don't have the cash sitting there. Well, I do have the cash because I'm going to explain a strategy in a second. I used to think, hey, December 31st, I could just go out and buy $50,000 worth of inventory, expense all that at the end of this year, and bring my tax bill from 100 grand to 50 grand. Problem solved. We'll kick the can on down the road. Unfortunately, it doesn't work that way. So why don't you walk us through how the IRS looks at inventory and what the proper methods are, when you can expense it, et cetera.
Sure. So a couple of different definitions. One, when you buy a book, let's say you bought a book for $10. That $10 is termed the basis in that book. Now, there are different ways to assign basis to items. You can take every single expense that it took to get that book, the gas that it took to get there, the postage it took to ship it, the actual purchase, the $10 purchase of the book, and you can assign every single pro rata share of that expense to that one book. So maybe it comes up to be $10.75 is what it really costs to obtain and bring that book into your hands. Or you can say, hey, it cost me $10 to get this book, and we can expense out the gas and the postage and everything else. But ultimately, that $10 or $10.75, that's the basis in your inventory. That is not deductible right in that month, right? That's actually assigned to that book. And so if you hold on to that book for 2 months and then you sell it in month 3, let's say we sell it now for $20. So you have a $10 basis, you sold it for 20, you have a $10 gain in that book. Well, at that point, that $10 becomes the cost of goods sold, right? It was the cost of getting that item that was then sold. So it doesn't turn into COGS until that item is sold, but we take that sale price and we deduct the cost of goods sold, and now you have the taxable gross or the net income that ultimately you're going to pay tax on for that item specifically. And that's why, Caleb, your strategy doesn't work, right? Where you're buying a bunch of inventory at the end of the year. The basis in that inventory actually isn't deductible. It's carried over until that inventory is sold.
Yep, 100%. So let's walk through a couple examples. I buy that book for $10. And again, you say you could change the basis, whether it's just the cost, whether you want to apply the gas and everything else involved in getting it. Either one's fine as long as you set it up and basically follow those rules consistently, right? That's the big thing from the IRS perspective.
Absolutely. Consistency is key, right? And you guys are in a world where there's actually a lot of moving parts, and you guys have a lot of different pieces. Everybody's selling on different e-commerce sites with multiple accounts and different currencies often enough. And so consistency is more important than anything else. Pick something and stick with it. Try to pick the most right thing possible. And then if you're going to make changes, they need to be really justifiable changes with respect to accounting and tracking basis in that inventory.
Yep. And that's where an accountant's going to help you kind of set up those rules. I know I've actually written out the rules that we follow in our business, and we just kind of resort back to those. So if we do get audited, knock on wood that we don't, if we do, there's very clear expectations of here's how we recognize revenue and expenses, et cetera. So let's go back to that example. Let's say you have one book that you have a $10 cost of goods in, and it doesn't sell. So you decide to donate it to Goodwill. Well, let's say the fair market value is $30. That's what you could have got on Amazon. After Amazon's fees, it would have netted you $20 minus cost of goods. So when I go to donate this to Goodwill, they give me the sheet that says, hey, write down the fair market value or whatever. can I deduct $30 because it's worth $30? How does that work?
So we're stuck between kind of a paradox here. You're telling me on one side that it's not selling, it can't sell. So is it worthless? And then on the other side, you're saying, no, it's worth $30. Well, then go sell it for $30. The situation we run into more frequently with the I want to donate things is you go buy a Gaylord of books and you sort out all the duds. You want to get rid of those, and you've got 100 books left that are actually worth something. Well, for round figures' sake, let's say you paid $1,000 for the Gaylord. Just bear with me here. And yeah, and that $1,000 for the Gaylord bought 1,000 books, right? So each book cost $1. From there, you pulled out 100 books. 100 books that are actually worth it, right? You use the Scout IQ app, and those are the ones you're going to keep. Okay, so those 100 books were purchased for essentially it's $10 a book, right? And that's how you get your $1,000 basis in that inventory. Or you could say, no, each one of those books was worth $1. And now I'm going to donate 900 books, each worth $1, and I'm going to keep 100 books that are each worth $1. Either way, it comes out as a wash. So you can recalculate the basis. So now each book is back up to $10. And then you get rid of the 900 books that are worth nothing, right? So that's a wash. You don't get to claim the deduction, but what you did was you offset your taxable gain in each one of the books that you did keep, right? Because you changed that basis from $1 to $10. So now when each one of those books sells for $20, you're not paying $19 in taxable gain. You're paying $10 in taxable gain.
Yep. So we see this question a lot in the group, and people kind of come up with those two scenarios of, let's just say $1,000 again. If I did, donate those to Goodwill or give them to a recycler or pay to get them recycled, whatever it may be, can I write off $900? And the answer is sure, as long as you're doing that consistently, and that's the general rule that you're using. You'll get that expense up front, and then as the other ones sell, you'll deduct the other $100 as cost of goods sold. Or you can have each book be $10, donate the 900 and write off $0 today, and then as those books sell, you're deducting $10 each time. At the end of the day, or at the end of the year, when all of those books have sold, or you've disposed of them because maybe some of them didn't sell, at the end of the day, your costs or your expense is still going to be $1,000. It's just a matter of when in that process you recognize it.
Right. And Caleb, you hit on another point, right? If there are expenses associated with disposing of those books, those are deductible, right? Those are completely separate. So if it takes a pallet jack and a truck to get rid of those 900 books, the rental expense for those is completely deductible. That's a business expense. We get to pull that off the top line, and we get to offset that against taxable income along the way.
Perfect. So as a general rule, guys, and again, correct me if I'm wrong, Chris, but as a general rule, anything that's a normal, ordinary expense in your business, if it's gas/mileage, we'll talk about cars in just a minute. So if it's related to getting to the area, if it's related to equipment you had to rent along the way, boxes that you're purchasing, all of that can be expensed, right? Those are ordinary, natural business expenses. The only weird one when it comes to this is inventory, because the IRS and the government says you cannot expense something until it's sold. That way you kind of get rid of this issue of I'm at the end of the year and I'm trying to avoid taxes. I can't just spend a ton of money on inventory. That's not a good way to do it.
Absolutely.
That's a fair way to look at it?
Yep, absolutely.
Cool. Well, we can get into the weeds a lot more in inventory, but as a general rule, you can't expense inventory till it sells. Most of the other expenses you can. Let's shift gears a little bit. Let's talk about travel. So let's say I'm going to drive 2 states over. We're in Colorado. Let's say I want to go over to Iowa. There's a big book sale there, and I drive my car. End up spending 2 nights in a hotel. I go to this book sale. I bring everything back with me. We've got a couple things in play. One, we've got some vehicle expenses. Let's hold that one just a minute. We'll come back to that. What about food on the road? This is a business trip. I'm not having anything personally related to it. I've got some hotel expenses. basically hotel and food, and let's just call it that. How do those factor in when it comes to reporting those for tax purposes?
Sure. So the IRS allows for it's a per diem rate. And I just looked up the 2020 per diem rate. It's about $55 a day. That's what you can pay yourself because you're away from home and you're going to incur expenses. So that's completely appropriate. That per diem rate can be calculated and pulled off the top line as a business expense related to travel. At the same time, right, you're going to Chick-fil-A for lunch. Well, you have to eat regardless of where you are. And so the IRS recognizes that, and they're not going to allow you to claim that as a deductible meal expense simply because you're in the next state over. I'm like, well, you still have to eat regardless. And so you don't get that full deduction. You don't even get the 50% deduction. But what you do get is you sort of reimburse yourself a little bit along the way with that $55 per day per diem rate that the IRS does allow. Hotels are fully deductible. That's a business expense. That's a necessary component of travel. And so that aspect of things is beneficial. We could talk about vehicles now, or if we've got a specific question on it later. But the travel associated with business, there's a couple of different ways we can tackle that. Either the
diem.
Yeah, so the per diem, if let's say I go out on this business trip, I have 3 meals in the day and they add up to $50 for those 3 meals, does that mean it qualifies under that per diem and I can deduct that? Or those meals that expense, even though they're meals that I have to eat anyways, do meals not count ever?
Yeah, absolutely. So if you go and you eat, you've got $55 a day to work with that you can deduct as a per diem travel expense. If your meals stay below that, great. If you go to Ruth's Chris or something like that for dinner, that's one meal, and so let's say your total meals expense for that day was $250. Well, you're out of pocket $195 there, and you don't get to deduct that at all.
Makes sense.
Now, if I don't do per diem and I just do food, how does that work? Let's say I have $30 of expenses and I didn't do the per diem and I don't pull $55 out.
If so, at that point you're just eating that. We don't get to pull that off that top line for food, and if you do, it needs to be reimbursed so that we can deduct and account for it as a travel meal. And so we can go and we'll categorize that as travel meals, and whether you do your $55 or not, your bookkeeper will categorize and capture that accordingly.
Okay. So as a general rule, it's probably best to pay yourself the $55, pay for food out of your own pocket then, and just deduct the $55 per travel day.
Right.
Probably the simplest way to do it. Okay. Switch gears. I'm driving to a sale that's 4 hours away. I don't spend the night. So I get up really early. I drive up to the sale, spend all day there, treat myself to Dairy Queen and Chick-fil-A, and not quite Ruth's Chris. I didn't kill it there, but I get some good fast food, and I drive back home that night. Can I still do a per diem? Can I still work with food? How does that work?
Nope. So you have to be gone from home overnight. That's the rule for the per diem.
Perfect. So pretty straightforward. If you're traveling in the state, we have to eat anyway. So the IRS says, nope, that's not really a business trip. Even if you drove a couple hours, that doesn't really matter. So you don't get to deduct anything. So overnight's a different world. Real quick, let's say we do a turn the page event. It's a 1.5 day event. So we're there and we fly in on a Friday. We kick things off on a Friday night. We do it all day Saturday. And then I decide, you know what? I've never been to Atlanta before. I'm going to stick around for an extra day. I stick around all of Sunday, and it's all personal. I'm not spending any time working on the business, meeting with anybody. And then I fly back home Monday morning. Can I deduct the entire airfare, hotels? How does all that factor in when you start mixing the business and personal?
Yeah, so airfare to and from, right, you have to come back. So that's pretty easy to justify as a business expense. If you extend it for one day just for personal travel and leisure, great, by all means do so. If that second night, right, or that third night, whatever the extension night is, that hotel doesn't necessarily count. And then you pick up a taxi cab or an Uber, you go out to the bar or something like that. Obviously, those are personal expenses. They don't go on the business card. And so that's how those would be categorized. But catching both ends of the trip as a business expense related, or from a travel standpoint, that's easily justifiable as business related. You've got to come back one way or the other.
Perfect. Side note, this is not Avery Romer, but it seems like him. Someone's asking, what if you sleep in your car? So does that count as an overnight trip? Can I reimburse myself for my hotel costs, that AKA my car? Does that change anything?
What if you sleep in a canoe? Would that change?
If it's on your car, it's different.
So we get into some really interesting nuances. We're kind of pushing the traditionalist envelope a little bit. So
That's
no,
what
we
booksellers
can't
do. We're not very traditional.
Yeah, we can't claim your car as a hotel expense, and we get to deduct that few days as of your monthly payment as travel that way. We've got to just kind of stay consistent with what is thought to be normal traditional business expenses, and so tracking mileage, tracking the ordinary expenses related to that vehicle is totally fine. We can do all that, but we don't get to claim it as a hotel.
Love it. But it would qualify then as an overnight trip if you are sleeping somewhere, regardless of whether it's at a friend's house or a hotel or your car.
Absolutely.
Okay.
Absolutely.
Perfect. Another side question, does Amazon have enough money to buy a private island where we can ship all of the sellers who tank the prices?
Probably. Will they do it though? That's the question.
Only if it's a tax deduction. All right, let's talk about vehicles. So I've heard a number of people say, hey, you know, we're getting just fine as a family of 4 with 1 car, and I'm going to start this book business, and I need to be driving around, and I need something bigger to handle all the inventory, so I get a nice big SUV or a van or something, whatever you're getting. How do vehicles work when it comes to taxes? Because there's obviously a lot of personal use and a lot of business use, and that gets mixed up quite a bit. What's generally accepted when it comes to vehicles?
Yeah, so vehicles are a great opportunity to save some money in taxes just simply through depreciation alone. The trick is identifying how much is being used for business and how much is being used for personal. So there's a few things that need to be tracked with respect to a vehicle. The ordinary expenses associated with the vehicle, and then the mileage. Most of the time, the vehicle mileage is going to come out ahead. And so if you're just going to do one or the other, track your mileage. There's plenty of mileage tracking apps out there. MileIQ is one, where you just put it on your phone and then you categorize your business trips versus your personal trips at the end of the month. And at the end of the year, you spit out that report, you send it to your accountant, and there's your business mileage. That's probably the most effective way to use a vehicle, the most routine way to use a vehicle. If you're in a position where, hey, you need a bigger car, right? The big panel van or the really large truck. Often the next question that comes up is, well, does the business buy it, or do we buy it? It really doesn't matter, because from an accounting perspective, we can reap the benefits one way or the other. There are some nuances if the business buys it. Now it's a business asset, because we'll take depreciation of that asset over time. But depreciation in the short term is really good. You just have to remember that you recapture depreciation when you sell it. And a lot of that is it's foreign concepts, foreign words, and everything on your end. Just recognize that for everything that comes out favorable in the short term from a tax perspective, you end up paying for it more often than not on the back end. And that's the case with business vehicles often. And so more often what I suggest is go buy the vehicle personally. We'll track the business use of that vehicle, and the business will reap as much benefit as it possibly can throughout the year for it. That's usually the simpler administrative way to handle it.
Yeah, and as you said, just when a lot of this comes down to simplicity, again, we can go down the rabbit holes, and there's so many nuances when it comes to taxes. If you guys want the simplest way to do it, it's what I do. And I've asked Chris this question too. Hey, we got fine, we did fine with one vehicle as a family. I want to get something else. Can it be a business expense? And we kind of had the same discussion. If you guys are looking for the simplest option, simply do the mileage. You can track it with your odometer, as simple as a pen and paper. If you're old school, nothing wrong with that. Literally just log it, say, hey, my odometer, this is the date, here's the time, here's the odometer reading. And I went to this sale, and at the end of the day, it was all business driving. Here's what the odometer reading was. Here's the difference between them. I love mileage deduction. Here's not really a fancy term, but it sounds cool. It's a non-cash deduction, meaning if you drive 100 miles round trip to a library sale, you get to deduct, I think it's 58 cents a mile in 2019. So you get to deduct $58. Now, did it actually cost you $58 to drive those miles? If you drive a Jeep and get 8 miles to the gallon, maybe it did. But if you drive a Prius and get 50 miles to a gallon, or a Tesla and get infinity miles per gallon, it didn't really cost you anything in gas. Sure, there's wear and tear on your tires, wear and tear on your vehicle. In general, you're hurting the life of your asset. But in general, you get to write off $58, even though out of pocket, out of your bank, it didn't cost you that. Yeah. So mileage is the easiest way to do it. I use Mile IQ. There's some free apps out there as well. I think Mile IQ is like $50-$60 a year. There's some free apps that do it as well. I don't do a great job of tracking all the logs. So Chris, we've got an office here. Matthew and I drive to it every single day. Can we deduct that mileage?
So there's an IRS rule, all right, but you guys get to capitalize on the fun part of all this. Your business travel starts as soon as you get to your office, right? So Matt, in your case, you drive from home to your office. That mileage doesn't count. But then you go up north from the Scout IQ office. You go up north. You drive back. You go out to a lunch. You go here, and you've got 3 other meetings, and then you come back to your Scout IQ office. You get to deduct everything business related to that travel during the day. And then Matt, you drive from Scout IQ home, and that mileage doesn't count. Right? So your work day and all your business travel starts and ends when you get to and when you leave your office. What's really, really fun about your guys' industry is y'all have home offices.
Mm-hmm.
So wake up in the morning, go down to your completely 100% dedicated business home office, check your business email, drink a cup of coffee in your slippers and your jammies, and consider that the start of your workday. Now, every business-related trip that you make throughout that day is fully deductible. And then check your email in the evening, drink your nice warm tea or your warm milk before you go to bed, and that's the end of your workday. And so that closes out the book from the business travel standpoint. That's how that works, right? So Matt, if you've got a Scout IQ home office, wake up, go to the home office, drink your coffee, check an email or two, start your workday. Then you've got to drive into the Scout IQ office. Well, guess what? Now that travel trip is deductible.
That is interesting.
That's a new
interesting.
One.
That is a new one, actually.
And actually, Matthew does have a Scout IQ office in his basement.
So I actually do have a dedicated office space in my basement. Today's actually a great example because I just came into the office for this webinar interview. I'm driving back home and I was working this morning at the house. So today could be a tax deduction on the miles driven here and back. But if I'm starting the workday, just a normal day, and I'm coming to the office for the whole day, that doesn't count going or coming back from, right?
Correct. Absolutely.
So on the topic of miles, can we, instead of using a mileage app, can we self-report? If I were to give you a spreadsheet with all my miles written down there, does that work? And also, can I do it later on? Let's say at the end of the year, I'm like, I forgot about this book sale I went to out in January. I know I went to Greeley and back at this many miles. Can I throw that in the spreadsheet, put the date I went there? Does that qualify? Is that as good as an app, or do I need to have some type of thing automatically tracking it?
No, again, all of that's perfectly fine. Just stay consistent with it, right? So if it's a handwritten journal and you've got an English composition notebook and that's what you use, awesome. And if December 31st, you're like, crap, I forgot that one trip in February. Well, just make a note, write it in there, no problem. That's not a big deal at all. You want an Excel spreadsheet, you want a Mile IQ app, it doesn't matter. You can send your accountant an email saying, hey, I forgot these 2 trips or the app wasn't working. That's perfectly fine. Just don't wait and try to do all of that January 15th when your tax preparer comes and says, hey, what was your business mileage for the year? I get that more often than not. Well, same as last year. Come on, man. Right. And so, yeah, you got to be able to justify it, because if the tax guy comes calling, he's going to want to see that verifiable proof. And so if you can give me a spreadsheet, or you can give me your composition notebook, or you print out the PDF, I get to send that to the tax guy and he goes away, rather than him disallowing that deduction because you just can't prove it.
Yeah.
Perfect. Well, Avery just joined. He was, we were talking about sleeping in your car earlier. So what's up, Romer? And he got a question on this. This is going to be an easy no. I'll just answer it for you. He goes, so every mile ever is a write-off. I'm always checking sales on my phone while driving. So can I just write off everything since I'm working while driving?
I think
Yeah,
that's a no.
Yeah, the texting and driving and all of that kind of stuff, Avery. Yeah, no, your workday doesn't start as soon as your phone turns on in the morning. It just doesn't work that way, buddy. I'm sorry. So.
All right, nice try, Avery. So next time you're going salsa dancing, you can't just call it a work event.
Right.
Yeah, and guys, it's a lot of this is like it's not the letter of the law, it's more the principle. I had a friend, and I won't say who he is. He's not in this industry, but we used to go out and grab drinks on a Friday night, and we'd have a couple guys from town, and we'd hang out. Nothing was business related. We'd get to the end, and he was a photographer, and he'd say, guys, hang on, the bill would come, and he'd go, photography. And then he would get the bill for all of us. And that was great for me. I didn't have to pay for drinks, but that's not really a business discussion. That's going to be frowned upon if you get audited. And just because it's a write-off doesn't mean that the government's paying for your meal. It still comes out of your pocket. It still hurts your overall revenue. So don't play those games. A lot of this is more, what's the principle? What are we after here? It's an accurate way to match expenses to revenues and show what's actually profit or loss on the year.
Right.
Got another question that just came in.
A guy named Cole.
A guy named Cole says, coming back to per diem and asking purely for a friend, if my friend's kids aren't sleeping and his wife's in a bad mood, can he buy a book or two about 45 minutes away and stay at a hotel while still getting the per diem?
Thanks in advance for your answer. I'll let him know. He's a great guy.
Yeah, just avoid the cats in the driveway along the way. You'll be fine.
So stay away from the cats. That's really the answer here.
Yeah.
Perfect. Sounds great. Okay, so I think we've talked about some good ones that come up. Again, it's an inventory business, so anything that's inventory, you can't just expense it. It needs to be expensed when it sells. Anything that's an ordinary business expense, boxes, sheets, software, why sheets? I don't know why I said that. Boxes, tape, packing material. We throw sheets in our boxes. It's really inexpensive. Software, all of those things are pretty much going to be just directly expensed. Can I load up on materials at the end of the year? Can I prepay for software for like upgrade to an annual plan? Hint. Can I go buy 100 boxes because I'm going to use them in the next month or two? Can I kind of do that and stack expenses at the end of the year, or do I need to kind of spread that out accordingly if I'm going to use them?
Absolutely. If you need to buy stuff, buy stuff. Now, I caution that because especially this time of year, everybody's like, oh, how can I save money on taxes? How can I save money? Almost to the detriment of cash flow and business revenue and everything else. So don't spend money just to save taxes, right? There's got to be a business need for it. But if you look back and you're like, wow, I went through 5,000 boxes last year and I'm sitting on a chunk of cash right now, I guess I'm going to go buy 5,000 boxes because Home Depot's got a sale. I don't know. And so I'm going to buy all 5,000 boxes right now. Okay, that's great. Deduct it. It's a necessary and ordinary expense of your business. We'll take it off the top line this year. That's not a problem at all. But don't go buy $50,000 worth of stuff just to make sure that you're not paying any money in taxes at the end of the year. You still need money to run and operate your business. It's okay to show a profit. Paying taxes means you actually made money.
Yep. Yeah, it's a really good point. We tend to think taxes are evil and I'm trying to avoid them, but taxes just mean you did your job right, you have a profit, and now you get to kick back into the system, whether you believe in the system or not. It's your right and privilege, I guess. So taxes aren't terrible. And again, it's important to make sure you have the cash available. There's two separate things. The cash in your bank at the end of the year is not necessarily going to be what the taxable profit on your business is. They're two different things.
Very true.
And that's mostly related. It can get really complex, but it's mostly related to the difference in inventory. So if you spent 50 grand on inventory and only sold half your inventory, you're still going to be out 25 grand on inventory, and your profit will reflect that as well. So inventory does get a little bit hairy. That's why we started this conversation with it. Speaking of inventory, a couple questions coming in, and guys and gals, if you have questions, drop those below, and unless they're related to per diems with your friends, don't post those. But a couple questions. People are saying, hey, I'm going to library sales, I'm going to garage sales, and I'm not getting receipts. So how do I track what I spent? How do I know, what's the proper way to do it? Do I need to ask everybody I'm buying at the garage sale, hey, can you write up a receipt for me? That's kind of tacky. That kind of tips your hand that you're a reseller, right? So what's acceptable here? What's the right way to do it?
Just track it. I mean, if you've got just a graph paper, right, or a notebook, if you want to write your own receipts, that's perfectly fine, right? You guys are a cash intensive business. You deal with a lot of just physical cash. Great. That's perfectly fine. Just track it. That's the most important thing to do. And so if you're writing things down on paper, you go home and you put it into an Excel document. That's fantastic. If you've got your phone growing out of your hand like Avery, and you can just do everything digitally, that's perfectly fine too. And as long as you're accounting for, hey, I spent $57 on inventory at this garage sale today. Fantastic. Then we can track it, assign it to the basis in that inventory, and go from there.
So again, the general rule is track things. Like, just, there's not much to it. Track it, whether it's an app, whether it's pen and paper, put it somewhere, document it, put dates, put timestamps, put where, the yellow house on the corner of this neighborhood. Just have something. The more details you have, the more the IRS is going to come and say, yeah, it's fine. Go ahead. That's great. You don't want to be making up stuff or trying to come up with things at the end of the year that's going to look really off. Just be tracking things as you go. Stephanie asked a good question. She goes, I'm going to a library sale. I buy the books. Obviously, the cost of the books are cost of goods sold. I pay my friend $20 to come and help at the event. Do I include that $20 labor cost do I add it to cost of goods sold, or can I expense it as labor?
So you can expense it. And that gets back to what we were saying before. Well, you can lump in all of the expenses associated with obtaining that inventory. And so your $10 goes to $10.75 per book, or you can break it out and say, well, it costs this much, right? And if Stephanie's friend costs $20, great. That's a contract and labor expense. It's a different line item on the chart of accounts, and there's a $20 off the top that goes to labor expenses for Stephanie's business that year.
And Stephanie, you'll want to do the labor expense as opposed to cost of goods, because you can't expense the full amount of labor until all of the books sell or you dispose of them. So if you want to maximize your expenses, aka minimize your taxes in the current year, again, it'll all turn into a wash once everything sells. But if you want to, what do they call that? Accelerate the expenses, then you're going to want to expense the labor for sure. Let's not get into this one too much. It's kind of a slippery slope. But if I'm paying someone for labor, a few sales throughout the year, I bring the same, let's say, Bill. I pay Bill to come and help me at a sale. And at what point do I have to start doing payroll or reporting that, or when does he have to report that? What are some of the basics of that?
Sure. So the conversation, well, the question there is really, is the individual a contractor or is the individual an employee? And so let's go with contractor first. Contractors, they have a reporting requirement once they make more than $600 in that calendar year. So at that threshold and above, now we have to file a 1099 at the end of the year and report that money to the IRS, right? So Stephanie's friend made $20. She doesn't need a 1099, but Stephanie's friend makes $620. Now Stephanie gets a copy of that 1099, and then we send a copy to the IRS saying, hey, this business paid Stephanie's friend $620. That needs to show up on her tax return. So that's one threshold. The conversation on, well, is the individual a contractor or is the individual an employee, depends on what they're doing. And really it can be boiled down to the scope of control. And so I use this example often and often when somebody asks employee or contractor. When I hire a plumber to come into my house and do work, the plumber is going to come to me and say, hey, I'll do that work with my tools and my supplies for this much. It's going to take this long to do it. And then I'm done. Take it or leave it. Oh, okay. I guess I'll take it. You're a contractor. That's a contractor relationship. If I hire someone and say, I want you to use this, you're going to use my hammer, you're going to use this type of steel, you're going to do it in 2 days, and if you don't do it right, you're going to do it again. Well, that's much more of an employee relationship now, because ultimately I control the end product. And so if I have control over the project and the end result of that project, that's much more of an employee relationship. So think about it that way when you're trying to decide contractor versus employee, is who has ultimate control.
What if I hire a virtual assistant and they live in another country? How does that play out?
So more often than not, that virtual assistant is going to be structured like a contractor. You're going to give them projects, they're going to complete them, and you're going to pay them for it. They're going to send you an invoice, and then you're just going to write the check or wire the funds or transfer the funds however you need to. That's much more of a contractor relationship. Depending on the country, there's different reporting requirements on their end. On our end, there's no 1099 requirement for a foreign contractor.
Perfect. All right, I want to be respectful of your time. We got about 12 to 15 minutes. If anybody has questions, drop those in. We're going to rapid fire through some of the ones that came in here as well, and we'll kind of go in there as well. What software do you recommend using to is there 1 or 2 or 3 softwares that are really good for tracking expenses or bookkeeping?
Sure. So Xero's good. QuickBooks is good. They've all got their flaws, right? So nothing is perfect, especially within your guys' industry. It's just really hard because you guys use PayPal like a bank account and you use cash everywhere. And so there's a lot of different feeds that come into this. Xero tries really hard, and QuickBooks has just been around for a really long time. They sync pretty well with PayPal. Those are two good ones in that end, if you're going to do this yourself.
Yep, and I would throw out Wave apps as well. It's what I use in my business. It's dual entry accounting, meaning debits and credits. And it talks to your bank accounts, and I think PayPal. But again, if you guys use PayPal, we're talking about you, Avery. Be careful as you're doing that because it does not make a great bank from that standpoint.
Yeah.
Here's an interesting one. How do you get a cost of goods number or an inventory valuation when you use Bookstore credit? So if I bring in 50 books to like my duds to a bookstore, right? So I have 0 cost in those books, and the bookstore gives me $20 of credit, and then I go and buy $20 worth of books. Do I have 0 cost in that because it was free money, or do I have $20 cost or somewhere in between?
So that was free money officially, right? If the IRS comes looking, they're like, you didn't spend a dime on that at all. And so your basis is 0 when all of it flushes out.
Perfect. So if you're using credit as a general rule, don't count that as money. You can't expense that because it wasn't money. When it comes to credit card rewards, let's say I've maximized all my credit cards and I buy all my inventory there. And at the end of the year, I get $1,000 worth of free credit card points or whatever. Is that revenue or is that free money?
Free money.
Free money.
That's a lot of fun. I have a couple of clients that really, really optimize that and just make a fortune in points and cash. And it's on the IRS website. That is not taxable income. That is free money.
Perfect. So that's a whole different school of thought, guys. There's a bunch of people out there that talk about like the points guy, how to maximize credit cards. If you guys are on Instagram, check out Lorenzo Ramos. He's been posting a ton of content there as well. If you guys use eFlip or do like tactical arbitrage or buy on Amazon to resell, definitely look at the Chase Amazon card. It's 5% cash back on Amazon purchases. So if you spend 10 grand on eFlip throughout the year or on Amazon, where you're buying inventory to resell, you get essentially 5% of that back or $500 free money. And depending on what tax bracket you're in and how much you're paying in taxes, that's the equivalent of making $700 or $800 or $900 in pre-tax money. So again, credit cards aren't evil. Don't go ramp up a bunch of credit card debt if your business can't support it. That's not what we're saying at all. Please be responsible. But there are some really cool things you can do. So Jeff, for your question, if you get Bookstore credit, basically you have a 0 basis in that. So don't count that as cost of goods sold.
Yeah, unless you could pull the Bookstore credit out as cash, right? And then you can claim that as basis. But if it's just credit and credit there, 0 basis.
All right. So if you're going to McKay's and they offer you $20 bookstore credit or $10 cash, you could take the $10 cash. That's a non-taxable event. It's free money, right? You could then go buy that $20 worth of books and spend $10 that was free money. And now you can write that off as cost of goods. So you have either option at your disposal. Cool. Someone says, is your phone 100% deductible?
Are you using it 100% for business?
I'm going to guess no.
Yeah. Ultimately, that's the question. If you're using it for business, great. Assign a number to it and assign a realistic number. And so if you want to call it 75% for business, fine. I mean, in my world, you can deduct anything. You can put anything down as a deduction. The problem just occurs when the IRS comes knocking at your door and says, hey, prove it.
Yep.
So your phone is not 100% for business. So don't try unless you have two phones. And then you've got a business phone and then you've got your personal phone. That's an acceptable alternative there.
Perfect. But again, we're talking about ways to simplify things, and that's going to get pretty complex if you're trying to save on taxes. So I'm going to buy a business phone. Sure.
Yeah.
So that, again, you're probably chasing the wrong game. You should be finding more inventory. Real quick, home office expense. So most of us work from home, and we got all these home expenses, and I've got a room in my house dedicated as my book prep. How does that work? I think there's a standard deduction now for home office. Is that right?
So there's two modes, just like with vehicles, right? You can break it out by the true square footage that is 100% dedicated to business, right? And some of my clients have very, very large partitions of their home that are just completely exclusively dedicated to business. Okay, let's mark it off. It's either segmented by a partition, a wall, or a door, or put tape on the carpet or something, and let's figure out the square footage of that. If it's something smaller, right? If it's just an office, right? I've got an office upstairs in my house. I'll take the simplified deduction, and the IRS lets me claim a value that changes every single year, and that's just what I take. But you guys, you have a lot more. Oh, it's probably like $500. Let me look real quick.
Okay, we'll put them on the spot here. So you can either take whatever the standard deduction is for a home office, like $500, or you could calculate all the expenses that came to keeping your house running that year. And you'll have to talk to a CPA, because I'm sure mortgage versus lease versus repairs versus all of that has to be kind of separated. And you can take, let's say your home office is 15% of your overall space. You've only used that for business purposes throughout the year. You could take 15% of the cost to run your house that year, essentially, as a deduction.
Right.
Yeah.
Absolutely. And that could be a big deal.
Does it change the deduction at all if I have a home office and this Scout IQ office? I'm in two separate offices. Does that offset the home deduction, or can I still take that?
So that depends a lot more on how the business is structured, right? And because your home office is yours with your business, and then Scout IQ is going to claim that office that you guys are sitting in this year. So it's a little bit different there. But it's $300 or 300 square feet at $5 a square foot. So $1,500 is the simplified office deduction for the year. But if you've got a 5,000 square foot house and you're using half of it for book sourcing, you're going to exceed that $1,500 simplified cap, and it's worth it. It's fine. Take the time. Let's break out those expenses. Let's just justify and verify that those are the actual expenses.
Perfect. Two more questions here, and then we'll, it's up to you if you want to stick around just a little bit longer. Brian Greenway says, I'm committed to growing. I'm still small. I don't make enough money to justify a CPA, but I don't want to get too far into it and have been doing everything wrong. So obviously you're biased, you're a tax professional, but his question is, how do I decide when to hire a CPA? When does it make sense?
So there'll be a tipping point in your business where you're spending more time trying to track your accounting and your expenses than you are actually running your business and going out and growing it. Probably a little bit before that is the best that I can say. Some people that takes 3, 4, 5 years and really, really high gross revenue numbers to reach the point where they're saturated. Other people, right, you're making $2,000 a month and you're task saturated, so go find somebody else. And so a lot of that has to do with how you run your business, what your systems are, and what you're comfortable with.
Perfect. Just like anything else, hiring someone on your team, when does it make sense to hire a lister? Sure, you could do it all yourself, but at some point you got to figure out what your time is worth. As a rough rule, if you think you're going to make 50 grand a year, basically cut the 3 zeros off the end. So it's 50, divide that by 2, your time is worth 25 bucks an hour. So if you can pay a lister $15 an hour, your time is more valuable doing more valuable things in the business. You should probably outsource that. Now, that's only if the business can handle the cash flow, et cetera. But start thinking about things like that. Figure out what your time is worth, not only today, but where you're trying to go in the next year, and then make decisions accordingly. And they're just business decisions. Is it going to remove, are you going to sleep better at night and remove some stress? You should probably do it. Can you figure it out yourself and do it? Absolutely. But at some point, it does make sense to pay for things like software, professionals in your area, consulting, doing some other things in your business as well. Shane, and this can be a can of worms, although it's getting a lot more simple now, is the whole sales tax, Nexus, FBA inventory. You want to talk about that for like 2 minutes?
Sure. It is becoming a lot simpler, right? The marketplace facilitator laws that are going into effect are making life a lot easier from the Amazon side of things. If you're using different e-commerce sites and you're selling things, you're still subject to sales tax withholding and reporting in the states where you have a nexus. Determining whether or not you have a nexus is actually state specific. So you need to be really, really careful. You always have a nexus in the state that you live in. That's just a fact. And then determining whether or not you have a sales tax obligation in other states is based on those state laws. Some of the laws have a sales volume requirement. So if you sell 500 units, you have a sales tax obligation. If you sell 499 units, you don't, regardless of price. The other side of the coin is some have a revenue minimum. If you sell $5,000 worth of stuff, you're fine. If you sell $5,001, you have a sales tax obligation now. And so knowing the nuances of each state and then the counties that you're selling in specifically, it can become quite burdensome at times.
Yep.
Yeah.
So the nice part is Amazon's up to what, 30, 35 states now that are doing it. So you can Google it, just check out which states are doing the marketplace facilitator tax is what it's called. If your home state's in there, that's going to make things a lot easier for you because Amazon now is going to collect, remit, and pay that to the IRS for you. And that removes your burden to do that depending on your own home state. And they're also doing that in a number of other states, which makes our job easier. It was kind of this, no one wanted to talk about it on the Facebook forums of, hey, I only live in Colorado, but I'm selling stuff in California and my stuff's in an Amazon warehouse in California. Do I technically have Nexus? Yes-ish. And that was kind of that gray area. And some people said, well, yeah, you do have a presence. You should be obligated to collect and pay the sales tax and file all the forms. Other people said, heck no, just because your inventory is there doesn't mean you control it. I don't know which one was right. The good news is now that's all kind of behind us. And California is now going after Amazon to collect that and pay it rather than individual sellers. So I'm a huge fan of the facilitator tax. If you're tax jar or a company that thrived off of that, maybe you're not a big fan of that, but those are some of the changes that happen in the marketplace. All right, it is 2:00 Mountain Time. I always tell Matthew not to use Mountain Time because nobody knows what it is. It's 4 p.m. Eastern Time. Thanks for being here. Chris, it's up to you if you want to stick around and answer just a few more. We'd love it. Otherwise, we'll let you get back to your busy schedule.
Yeah, I actually have another phone call, so I can't stay on, but I'm happy if there are emails or other questions that people have, please don't hesitate, and happy to answer questions where I can.
Okay, Chris, what's the best place for people to find out more about what you're offering and be able to contact you?
Sure. So fidelistaxandaccounting.com is my website. There's a link in there. You can sign up for a newsletter. You can email us, and then my phone number is on there as well. You're more than welcome to reach out, and we can schedule time to talk a little bit more specifically about your situation.
Perfect. So I dropped a note there. Fidelis, Fidelis, taxandaccounting.com. So fidelistaxandaccounting.com. You can check out Chris. If you guys can't figure that out, drop me an email and I'll send you his contact info as well. Again, he's who we use, and we'll probably have you back on here once things calm down a little bit in the spring for you, Chris. We do get a lot of accounting questions, and we'll probably go further into the rabbit hole. But with that said, thank you for your time.
Thank you very much. Yeah.
If you guys are watching on Facebook
Absolutely,
and YouTube,
guys.
thanks for being here. We do these calls once a month. We bring in different experts. We talk about different topics, and we usually ask you what you want to talk about. So last month it was repricing. This month it's accounting, and we'll be kicking things off in 2020 with some other topics as well. So thanks for being here. We couldn't do it without all of you, and go out there and finish the year strong. Thanks again, Chris.
Take care. Bye.